Hello all, welcome to Sand Compounding. This is Sandeep Anand. I'm starting a new series called 20 for 2030. And what does that even mean? For investors, in investing, the formula of compounding, which is very powerful, and the formula is P into 1 plus R by 100 whole to the power N. And N is an exponential factor. N is nothing but, we all know, it's a time invested, time we invest in the capital is invested in a business, or the tenure as we can call. And the tenure or longevity of our investment is very important because if we make investments in businesses that can sustain for 10 to 12 years with a good level of growth and at the right valuation, we are made home. The returns on the capital invested would be very high. Now, how do we find businesses which can run and which has such longevity of 10, 12 years, especially in today's world of disruption? Every business is getting disrupted. Erstwhile, no wonder Warren Buffett, the legendary investor, used to find businesses which are least disruptive and that can run for a long time with growth, and he called it as moat. While moat investing, I don't know if it's really that relevant in today's generation because all businesses are getting disrupted with the advent of digital and mobile and internet. Now, identifying such businesses is a very difficult task, and I have tried my best to find out 20 such businesses which can pay way till 2030, and come 2030, in hindsight, these businesses would have been great to hold for such a longevity period. Now, how do we find these businesses? I've applied the principle of inversion, which I learned from Charlie Munger, and we look forward to 2030, and when we look back in hindsight, the inversion principle, based on that, what businesses could and why those businesses could sustain till that period is what I've done. So here are such 20 stocks, and one most important thing, not in investing, not all businesses are great investments at all point of time, but most point of time. So there could be reasons being valuation is one important factor which can control the time when we enter into a business. If there are frothy valuations, our returns would be mediocre. So it's very important to identify great longevity, great businesses which has longevity and at the same time that has good growth and the right valuation. So, but this could be a blueprint or a watch list that we can use to identify, and when the correction happens or recession happens, these great businesses could be a great entry point, could give a great entry point. Hope this gets interesting as we move on. The next business in 20 for 2030 list is a revolutionary business created by a revolutionary CEO, which is Tesla, and created by Elon Musk. Elon Musk is known for his revolutionary thought process and visionary leadership. He evangelized the whole vision of renewable energy space, electric vehicles, and getting rid of the carbon emissions from the world. He has there are three parts of businesses with Tesla. The main part being the electric vehicles and autonomous vehicles, which was started in a decade back, and then there is solar energy space and the renewable energy space with electric batteries and storage space, which is the second leg of the business. And the third leg of the business, which is the SpaceX, which is again another revolutionary thought process of taking humans to space, and SpaceX is itself valued at around $30 billion today. Tesla is in talks currently because 2019-2020 could be an inflection point for this company as well as for the CEO, because what it started as just an electric car manufacturer has now become a global phenomenon. Globally, they have ventured into the electric space and renewable space, and expanding the horizons beyond the cars into trucks, and now the SpaceX is catching up big time with their successful Falcon launches, and they moved into China, ventured into Europe. It's becoming a global monopoly in electric vehicles, and there is no close competitions because incumbent players are not able to meet up to the low-cost battery and the most powerful batteries they have in the electric space. Tesla, let's analyze more in detail what they've got and why is it part of the 20 for 2030 list in Sand Compounding. So Tesla, delving into the business segments and the business overview with competitive positioning and things. we know that Tesla is almost a monopoly in the electric vehicles with highest quality and compelling models. Now they have multiple other business segments other than the cars and electric vehicles, like artificial intelligence. They have the autonomous cars, which is the self-driving cars, and then they have the battery business, that's a renewable energy segment that they put together, call it as the energy side of the business. They have a factory called Gigafactory in US, and now it's expanding into China and Europe. Then they have the space exploration company called SpaceX. We all have heard about SpaceX and their successful Falcon launches, and obviously the newly ventured high-speed travel tunnels called the Boring Company. Now Tesla was a first mover in electric vehicles market, which built its name from nowhere, and that is a typical scenario, right? Whenever there is a disruption, always a new player comes in and disrupts and displaces the incumbents who are the leaders in this. For example, in this case, auto industry leaders were like GM, Ford, Daimler, Audi, and everyone were sitting on the comfort zone for over a century, and they've had their own niches, and including Ferrari, they all had their own niches, and they were running the car businesses. And Tesla came from nowhere, disrupted through the electric vehicles, and now they're getting into trucks and many other parts of auto, and many other zones where they are developing new sustainable energy driven cars. Tesla has around 18% market share in electric vehicle markets. They are selling around 500,000 EV cars a year in 2019-20. So as we speak, they are selling around 500,000 electric vehicles. That's mainly cars. They just ventured into the trucks and other businesses now, and including sports car. They recently launched a Roadster now, but electric cars are the primary source of revenue for them, and almost 99%, or rather 100%. Now, in addition, with the opening of Gigafactory and the acquisition of SolarCity, Tesla now offers a full suite of energy products that incorporates solar, storage, and grid services. So, Gigafactory, and also they call it the SolarCity, the acquisition, they have completely transformed the way the energy is stored and transformed into usable energy, renewable energy through cars and other automobile services. They use a grid mechanism, and the solar power that is being stored, and the energy that is stored in their Gigafactory are huge. And as the world's only fully integrated sustainable energy company, Tesla is the vanguard of the world's inevitable shift towards a sustainable energy platform. The whole world wants to get rid of the carbon emissions, and there is a huge thrust on moving towards renewable energy and sustainable energy, which where Tesla is leading that whole transformation. And their battery and energy arm alone should be valued separately, which we will discuss later in the slides. Now, Tesla also has entered into electric vehicle based trucks called Cybertrucks with 3 variants, which are touted to be better utility than a truck with more performance than even a sports car. So it's touted to be having a performance of sports car, but and it was substantiated and walked through by Elon Musk in the launch of the trucks. They have 3 variants as of date, and the picture, Tesla, there is Elon Musk talking about Tesla Energy could grow to roughly the same size as Tesla's automotive business, and solar would grow on a percentage basis the fastest of any, with storage second. So there is that clairvoyance that Elon Musk has, that someday the Tesla energy business and the solar on a percentage basis would grow faster, and someday it would become even bigger than Tesla's electric vehicle business. Coming to the next slide, there is a pictorial view of the different models that is existing today in cars. That's Model S, 3, X, and Y4 models are represented there in the picture. So Y being the latest, I believe, that is a crossover for an SUV, and because of the shift and Tesla's entry into China, Tesla is a big hit in China. That's why they opened a factory in Shanghai. And then there is the truck pictures below that shows the Cybertruck and a semi, and that is only for North America as of date. I think it's in the development process. On the right side, you could see the installed annual capacity, how many cars they can produce, how many trucks they can produce, and what is the status in terms of production. So they have this factory in Fremont, which is producing Model S, X, 3 and Y, all four. Now Shanghai has started with Model 3. Put together, they are able to manufacture approximately 500,000 cars today. And they started in development, they started a factory in Berlin, Germany, so for Model 3 and Y production. And Germany invited them with a red carpet because they wanted to expedite the transformation towards electric vehicles and sustainable energy. And with North America, they have recently ventured into semi, roadster, and Cybertruck. The prototypes were released, and I think they would hit the road very soon. Now, operational summary. The quarter-on-quarter growth has been shown. So the Model S, X, both are premier segments, and they are growing at roughly 10%. Whereas Model 3, which is a low-end variant, bottom of chain, where they are growing at 9%. They have the maximum revenue coming from Model 3, and year-on-year growth is 42%. Now they are they have deployed solar, and as of Q4 2019, they have 54 megawatts of solar deployed and storage of 530 megawatt hour. And they have supercharger stations around 1,821 and supercharger connectors of 16,000. So it's well progressing. The strategy is well progressing, and we can see quarter-on-quarter growth, roughly around 10% sales growth, which is what we see typically. Now the distribution of the globally how the cars are being sold and how they are produced is shown in the bar chart above, and that's as of data for 2019 beginning, I believe. Now one thing to be noted about the truck business is also that the prototype shows that they're going to be very performance oriented and very lightweight. They have made the performance going to be much faster than the existing truck business, and it's a luxury for the drivers to drive these trucks. A lot of automation, and this is going to disrupt the entire trucking industry, which is going to be a huge market in the future. Now coming to the energy business, Autopilot and SpaceX. So these are the three other businesses that Tesla has in addition to their car automobile business. Now they have energy business. There is the Gigafactory picture there, Nevada, and also in Shanghai. They started in 2019. They look at that exponential growth curve of the energy storage deployed in terms of megawatt hours, and 2019 it's roughly touching 1.65 gigawatt hour. I mean, that's huge. Energy storage deployment reached an all-time high of 530 megawatt hour in Q4, which included the first deployments of Megapack, a new commercial scale 3 megawatt hour integrated storage system that is pre-assembled in Gigafactory Nevada as a single unit. They call it as Megapack. Now 2019 alone, Tesla deployed 1.65 gigawatt hour of energy storage, more than deployed in all prior years combined. This is typically the blitzscaling factor, right? I mean, this is the exponential growth curve that shows just in 1 year. In 2019 they deployed 1.65 gigawatt hour, which is a combined energy storage they did all through till 2019. Now next year could be even much more. It's a multiplier effect. It's growing in a geometric progression, and that's how exponential growth happens. And this is why Elon Musk is confident that energy business would someday be bigger than their automobile business. Now in Q4 they continue to ramp up solar glass roof production, as we can see in the pictures, as well as the installation. Now the energy business, look at it this way, right? Eventually Tesla's energy business could even be bigger than the oil business, because they are fast displacing. There is no demand for oil. It's already down to $50-60 per barrel, and the crude value is going down, deteriorating, and oil businesses are going to shut down, if not shut down, at least deteriorate businesses. That's so the market, total addressable market, and the total cost of this energy is shifting from crude oil towards electric and renewable energy and solar energy, and Tesla is right at the helm leading this, and I don't think there is a second competitor close enough in terms of energy business, and they are well building this slowly and steadily, and now it's gained the pace, and it's going to be even more rapid growth eventually in future. And Tesla is energy business is going to be big, for more than we can envision at this point. Now about SpaceX, this is they are investing their capital towards SpaceX also, and the mission is to enable humans to become a spacefaring civilization, according to Elon Musk, and a multi-planet species by building a self-sustaining city on Mars, the planet. Now in 2008, SpaceX Falcon 1 became the first privately developed liquid fuel launch vehicle to orbit the Earth. That was 10-11 years back, and following this milestone, NASA awarded SpaceX with contracts to carry cargo and crew to the International Space Station. So government spending on NASA has been increasing on their missions, especially the lunar of recent, and NASA outsourcing this to multiple players like SpaceX, Blue Origin and all are going to be big tailwinds for SpaceX. Now this business, we really don't know how it's going to transform, but there is a capital that's going towards SpaceX initiatives. But it's a long haul, I think, to kick off from an ROI standpoint. Now the third part of the business is Autopilot, autonomous. There is a self-driving mechanisms driven by AI and data that is underpinning that transformation to the autonomous vehicles, autonomous technology. Now all new Tesla cars come standard with advanced hardware capable of providing autopilot features today and full self-driving capabilities in the future. Now through software updates, it's like a software as a service kind of updates that Tesla is able to do. So this software service is going to be also a big significant part of their business in future. Now robo taxis or the autonomous taxis will be a high margin business that's still not accounted for in the business valuations today. Today Uber and Lyft are all leading the pack. They are also venturing into a great deal of autonomous vehicles. Google's Waymo is a close second competitor for Tesla's autonomous. They call it Autopilot, and they are having challenges in terms of launching it and commercializing it. But things are going to be rapid at some clip. It is gonna grow very fast, just like the energy business. So they are in the prototyping stage at this point with respect to the autonomous. Now coming to the financial aspects of revenues, profitability, cash flow and balance sheet, you could see this annual results. I have put there a slide where it shows the revenues breakdown and the P&L. So basically revenues, they are running at around $25 billion as of 2019, and it's growing at 10-12% roughly, and the cost of revenues are put in there. This battery car businesses or electric vehicles are hardly countable in teens, maybe the number of auto parts, and so it is not capital intensive from that aspect. So the total cost of automotive cost of revenues is around $16.3 billion, and the energy part is a little costlier with the battery cost fetching in, so that's around $1.3 billion. Services and other aspects put together is $2.7 billion. Total cost of revenues $20.5 billion in 2019. So they still have a gross profit of $4 billion, which is pretty good considering that they are still in the innovation stage in the last 8 to 10 years, and this is going to go down a lot, the cost of revenues, and we could expect the gross profit to double maybe eventually in the next 5 to 6 years, which will be a significant achievement. Now the total revenues are accelerating around 15% year on year, gross profit margin roughly around 20% in 2019. This 2019 is a turning point for Tesla since they turned positive on operational profits and generating around $1 billion of free cash flows achieved through cost control. So they have become positive in their operational profits, as well as the cash free is roughly $1 billion, which they can redeploy. Now point to be noted here is that they are entering into a self-fulfilling prophecy in terms of meeting the demand, capital demand, to redeploy, to plow back and grow. So it is almost moving towards that stage, but they still recently did a secondary offering to raise capital. Now, Tesla is a game of operating leverage with high fixed cost, and we can see that in the balance sheet. Once the quick ramp up of production happens and commercialization happens, they are going to increase operating levers and the margins subsequently. They have accelerated pace of production from learnings till now, and is going through an exponential increase in the production and meeting strong demands. So we could see that their learnings are getting implemented, because when they started Shanghai plant in 2019, they from the point of breaking ground, they took just 9 months to commercialize, and they have sold many thousands of cars already. So that is the way things progress geometrically, after some breaking point, and 2019-2020 could be the years of breaking point, I would say. And surprising fact is that they spend no money on advertising. It's all through the word of mouth, and in terms of profitability garnered, they have garnered around $359 million GAAP operating income with 5% operating margin in just Q4 FY19. So now the next thing to be noted, they are positioned to accelerate revenue growth even further through increasing build rates in Gigafactory Shanghai and eventually Berlin, and Model Y production line. Now these production lines increases will allow for higher total vehicle deliveries, and obviously associated revenues, and obviously trickling that down to the operating side, operating levers kicking in. The margins will improve as the it's more of a higher fixed cost business, and so operating leverage will start kicking in. For all this to take place, maybe 3, 4, 5 years down the line, we'll be looking at a very high margin, as very successful, fast growing business that Tesla is. Now, the last slide, why I think Tesla will still be a great business to hold in hindsight when we look back in 2030. Now, the Gigafactory and Tesla's energy storage is where I'm more sanguine on. That will pave way for future of electric demand globally. And Elon Musk forecasts that the company's energy business will eventually be the same size or even bigger than its automotive sector. And the latest sign that the company plans to put more time and resources to scaling up its solar and storage product indicates that vision. One should look at the potential industries Tesla can displace, like oil industry, railroad for transportation, trucking industries, taxis with Autopilot, and the list goes on. So they are going to disrupt the entire automotive industry, not only cars and trucks. The transportation is completely going to look different 5 years, 10 years from now. Now they are slowly building the tunnel business for transportation, which could be another driver for revenue, and they are going to eventually even replace railroad transportation requirement for railroad, because today the turnaround and the transportation cost is way too higher when we look at the railroads. And Tesla with its new age trucking and semis and all of that, it's going to reduce the end-to-end transportation cost per unit, and eventually the oil business, the railroads and whatnot, you could see a completely different paradigm of transportation industry 5 to 10 years from now. Operating leverage will kick in once a threshold of 10,000, 12,000 cars per week is achieved in production. Today they are roughly doing 5,000 cars per week, so there is a doubling required, and Tesla is estimated to produce around 3 to 4 million cars per year by 2024, which will play out significant operating levers to increase margins. Now 3 to 4 million cars per year is a huge number, and now from that point onwards, the growth is going to be exponential. Now in 2019 alone, Tesla deployed 1.6 gigawatt hour of energy storage, more than deployed in all prior years combined. This is the blitzscaling feature of this business. Blitzscaling is the term coined by Reid Hoffman, which became famous recently. That means that what do you do when you need to grow really, really quick? And that's a science and art of rapidly building out a company to serve a large and usually global market, with the goal of becoming the first mover at scale. Now similar was their turnaround of production in Shanghai just in 9 months after breaking ground, underpinned by the learnings, which is symbiotic to the accelerated reduction of cost of batteries over the last 5 years of production. Now you should look at consider another factor, that the cost of production of batteries is coming down exponentially. The revenue growth is increasing exponentially. These are two crossovers that's happening, and this is leading to the operating leverage and subsequent increase increase in the operating profits. So this is a blitzscaling factor, and it is already playing out, as we can see. Global market share of Tesla cars, trucks with their expansions in China, Europe and US will start increasing as the competitive car makers are unable to meet the quality of EV cars that Tesla is making. So the competitors are also coming up with the electric vehicle cars and trucks, but I mean at least cars, but they are not able to meet up the quality of battery, whether you take, or the cars with autopilot features that Tesla is able to do. So competitors are fading out eventually, and their capex is to meet up the growth. Their capex is still more towards the non-electric vehicles or the combustion vehicles. Now the sophistication that Tesla has brought in with their artificial intelligence and the data that is they have captured through the autonomous testing, those are the things that is panning out in terms of their competitive advantage, and they have significant competitive advantage in terms of the technology power through the artificial intelligence, and the autonomous is also aiding, where they have brought in some of the autonomous features like partial autonomous features into regular Tesla electric vehicles. Overall, I think the transportation industry is going to see a complete paradigm shift. In 5 to 10 years, electric is going to rule, renewable energy is going to rule, and many of the performance in transportation is going to be faster than today what it is, and the cost is going to be much lower. So Tesla being at the hem of that, I think is going to rule the roast for the next decade. I hope this was useful. Thank you.